Hi guys, welcome back. What a wonderful day today again. I just posted my video yesterday and mentioned again my 2021 strategy, and they really have been flying today. Look at EH, 53% in one day, and then YSG 8%. Even the Huami, who has been stagnant, is still up 8%, and the Xiaomi that I bought last Friday with the blacklisting news. So this is one of my accounts. I have a total of 5 accounts, and just this account alone today it's up 40,000, and all my accounts together were up around 50 to 60,000 today. So today I want to do an update on EH. And before I begin, I need to tell you guys the game we played yesterday, I'm afraid I need to disappoint you because it's not NIO, as so many of you guess it's NIO. Now, hate is a strong word. I don't think people so much hate NIO, so I'm gonna give it another day and I will post my next video about the stock X and announce the winner. So now, let's begin. EH is really shooting up to the sky. If you have bought in with me around 20 to 21, and I have recommended quite a few times to buy, and if you have been watching my videos, you probably have taken the chance of last Friday's blacklisting news as a chance to buy the dip. So congratulations for those of you who have been riding this with me. On my 2 videos last week about EH, I said the institution investors are heavily buying in to push it up because there was no big media reporting anything, and not many people knew about EH last week. So I think it was institutions heavily buying in. You can definitely see some FOMO at around 50s area. And the news last Friday about blacklisting really did them a favor to wash sell and let a lot of retail investors cut loss so they could do a quick wash sell. And today there was a big push pushing through the resistance at 50. And I can see the FOMO is starting to kick in. So it really has tripled since the time I bought in. Within 2 weeks, now we see the distribution of chips. So the institutions is really trying to use a very violent way to increase price to make people take profit in order to increase the average price of the chips. You see, here it was 19, 20, 22, 25, 27, 30. Because a lot of people cannot fight the urge to take profit. So that's why the chips are also increasing. It means during the big increase, people were taking profit and institutions kept buying. But now at this point, the current price is 62.6, while the average price of share is $30. So that's a big distance. And if the institutions want to keep pulling up, it's much harder because people would be taking profit here. Because you see the chips here are very little compared to all the ones that already make profit. So they need to move the chips higher to here in order to keep pulling up. So this is why I think it needs to do a wash sell. Because if the distance is so big, it's very hard for them to continue moving up. When institutions are heavily buying in, you don't realize it because they're trying to be quiet. But when they do a big jump like this, like 30 to 50% a day, that is trying to let everybody know and inviting more retail investors to come in. Now let's talk about the valuation. When I first recommend Ehang, it was just 1 billion, and now it's 3 billion. Is Ehang overvalued? Is it too expensive? Does their valuation justify? Right now, they have sold 80 units, and they estimate to sell 200 in this year. So even with 180% gain year over year, it's still a small number, and they are not making any profit yet. So why does it justify 3 billion? So right now, Ehang has 4 sectors. There's air taxi, logistic, smart city, and air media, right? So if you consider they only have sold 80 drones, then of course 3 billion. It's crazy expensive. It's very overvalued. It's so in a bubble. But I think this sale, that is for some of the tourism and the firefighter. I think this is just the current revenue they can make to cover up their expense for now. The tool to knock on the doors to enter different countries. But what I look forward the most, that has the massive potential, it's not this. This says China's take-out food deliveries market, it's around 650 billion and 450 million users in 2020. And the last miles delivery market, it's near 2 trillion in 2020. And this, the high-end online taxi, 400 billion. Let's just say out of this, 5 to 10% of them would convert into air taxi in the future. That is still 20 billion to 40 billion. And this is all only in China. Can you imagine the scale in the whole world? So these are really the most attractive to me. That has massive upcoming potential. This is why I said yesterday that I think EH is going to revolutionize our life. And right now, in the whole industry, Ehang is the first one to have autonomous driving drone with passengers on, with thousands of tests, and can go through all kinds of weather and storms. Being the first one means you have the freedom to price. You can set the rules. For example, the air taxi traffic rule, the landing station, the platform management, etc. And of course, to take bigger market share. As they're the first one to go in, they're the first one to build trust with clients. And the brand is there. So right now, Ehang doesn't really have much competitor because they're the only one that have existing ones. And the other ones are Boeing, Airbus, and then there are some other startups that are really not near what Ehang has achieved yet. There's one called Lilium, and they have something that's close to getting to market. So for now, Ehang is sitting in a quite comfortable position. That's why I think 3 billion is not overvalued for Ehang. And I don't think we're in a bubble considering the future massive opportunities we see there. But I'm very happy if there is some analyst coming out and giving out a low price target, or some expert trying to talk down Ehang or saying it's in a bubble or hype and drive down the price, I'll be very happy to buy the dip. So this is why I'm so bullish on it. And I think institutions know the potential of it, and that's why they have been buying heavily. But if retail investors don't realize this potential, they will be easily shaken out. As you know, I like to play it safe. I don't like to chase. I prefer to buy the dip when it starts to cool off. And for now, for the share that I have, I'm going to hold on to it because I just think for this kind of high growth stock, it's more risk to sell than to hold. As I said, I have very high expectation on EH, and I expect it to at least 5x to 10x in a couple years. So I might just forget the short-term price action at this point. That's it, guys. Hope you can find my video helpful. Make sure you subscribe to my channel and give me a big like. Thank you.